Welcome back, friends. So we are seeing a tremendous resurgence in the price of gold, having reached its all-time high and now going even further. I devote this video to explain what are the factors which are causing such a stupendous rise in the price of gold, and more importantly, what lies ahead. If you look at the scenario around you, Donald Trump is trying to impose tariffs, across the board tariffs, and that could include gold as well. So therefore, you're seeing a tremendous surge in attempts to withdraw the gold lying in the UK held gold vaults, and the Bank of England slots are over full at this point of time. All existing slots are booked as the market players are racing to ship the metal to the United States to take advantage of a surge in gold prices there. Gold has become suddenly more valuable in the United States than in other parts of the world, as traders worry that supply will plunge if Donald Trump's across-the-board tariffs, both announced and planned, make imports of the metal costlier. US gold market has been trading at a premium to the London market, and owners of the gold bars in its underground vaults have been looking to take advantage of that price differential. As a result, the Bank of England, which has the second largest stock of gold in the world, has been seeing strong demand for gold withdrawals. All of those bodies who ship the gold, they have all got the slots they need over the next few weeks. If you are coming in new, you might have to wait a bit longer because all the existing slots currently booked up. Now let's come back to understand that why gold is glittering as never before. Is it just a Donald Trump tariffs? Is there something else? And there's something else which is technical in nature, but I'm sure you will enjoy understanding what else is going on in the background. Geopolitical turmoil is obviously one of the explanations. Inflation concerns amidst insane tariff dramas is another, as I just explained. However, there is a third, less noticed issue which is bubbling away too, that some of the hedge fund contemporaries of Scott Bessent, the hedgy turned US Treasury Secretary, are speculating about a revaluation of America's gold stocks. Now, currently, these are valued at just $42 an ounce in national accounts. But knowledgeable observers reckon that if these were marked at current values, $2,880 an ounce, then this could inject $800 billion into the Treasury general account via a repurchase agreement. That might reduce the need to issue quite so many Treasury bonds this year. This week, such chatter intensified after Scott Bessent both pledged to monetize the asset side of US balance sheet. In other words, to focus on assets as much as liabilities, while also promising to lower the 10-year Treasury yields. Remarking to the current market value would mechanically deleverage the US balance sheet. It is time to get creative around Uncle Sam's balance sheet. That's what seems to be the message of the new Trump administration. Will this ever happen? Well, it depends on the situation, not on what Scott Bessent wants, but around the ever-capricious Donald Trump who sets policy. The fact that his wild imagination is swirling everywhere underscores three important points. First, investors know that Scott Bessent has an incentive to be creative, given the scary fiscal hole. As you know, there has been a talk that America's deficit is so high that the way that the deficit is being tackled is something which is unnerving the bond market. And if it reaches that inflection point, this can impact the stock markets as well. And as you know, Donald Trump loves these stocks and it's constantly on his watch. So he would not want that to happen. House Republicans are mulling a massive tax and spending bill that would add up to $5.5 trillion of net primary deficit increase. So instead of the deficit going down, it will go up further because of these tax cuts. And this can boost the interest cost by over $1.3 trillion over the next decade, according to the Committee for a Responsible Fiscal Budget. That could spark bond market alarm this spring, if not a congressional revolt from populist nationalists. And that hole cannot be plugged just by smashing a tiny agency like USAID or letting Elon Musk halt the federal payments. While there are potential cost savings, the only way to create fiscal responsibility is with substantial tax increases. Now, that's not going to happen either because they are contemplating tax decreases. Second, Scott Bessent needs currency tricks as well as fiscal ones. As J.D. Vance, the vice president, told Congress last year, Trump's cable considers the dollar to be wildly overvalued to the degree that it is hauling out the country's industrial base. Naturally, it is getting uncompetitive. That they attribute this to its reserve currency status. While they would prefer a weaker currency, Trump also wants to retain the global dollar dominance, and Scott Bessent himself knows that tariffs will probably strengthen its value. This makes their policy seem bizarrely contradictory, isn't it? Some market commentators, such as Luke Gromen, think that contradiction could be resolved if the Treasury tolerated or enabled gold to keep surging against the dollar. Gold is likely to be a key pivot for the new system that Donald Trump's administration is clearly trying to engineer. Many mainstream economists would probably disagree, but that just illustrates the third key point, the realm of possible policy making. The so-called overturn window is now widening. Look at the dense investor memo written last year by Stephen Mirren, who heads Trump's Council of Economic Advisors, which is the most thoughtful explanation of Trumpian financial economics that I have ever seen. Mirren argues that investors should expect tariffs to be used initially as a dramatic negotiating tactic. They will later be deployed as a longer-term means of raising revenue and demarcating geopolitical allies. Mirren says that dollar's reserve status and the American military dominance are so tightly entwined that White House could force countries who enjoy the U.S. security umbrella to finance its deficit by buying very long-dated treasury bonds. That while tariffs will initially strengthen the dollar, the greenback could eventually fall, even if White House defends its reserve currency status. How? Mirren outlines several tactics that could be used, including voluntary cooperation from the Federal Reserve and a multilateral dollar devaluation accord. Such ideas may seem crazy, but the policy path to implement tactics like these without material adverse consequences is narrow. Quite so. If they start playing games with a weakening dollar, then that is going to be very, very risky. But what Mirren's memo shows is that once unimaginable ideas are now becoming entirely imaginable and not just Donald Trump's threat to invade Greenland. Friends, therefore, it is in the interest that of the Trump administration that the gold keeps going higher, as I've just explained, and that is the reason why you're seeing gold move sharply higher. And probably more is yet to come. To get to know more about the outlook of gold, medium term, long term, and also of US stocks over the short, medium, and long term, to join our Prime or Prime Plus Telegram groups, which are going to be addressed specifically at all these various asset classes. You can join by WhatsApping us on 982-086-1044. Alternatively, you can email us at globalmoneyinvestor gmail.com. Happy investing and have a great weekend ahead. Take care. Bye-bye.